Good morning, everybody, and welcome to the Seiler Wealth Management video blog. I am Lee Seiler, also known as the Stock Doctor. Website is www.stockdr.com. Today is Wednesday, July 6th, and of course, I hope everybody had a great 4th of July holiday weekend, and there was some things to celebrate. Last week, the markets rebounded nicely from the Brexit stuff, okay, the British exit of the European Union, and we had a big rally. I mean, yes, the markets got hammered the week before on a Friday and that Monday, but then the rest of the week last week, we rebounded significantly and ended the week up 3%, which is really the best performance, weekly performance so far in 2016. So the market shook it off. I had a feeling this week was probably going to be the give back time. Markets don't go straight up, and they don't go straight down for that matter. Right now, technically, we're in a broke down market. Okay, we've broken many support lines. Last week, was it a dead cat bounce? I don't know, but this is probably not a bear market. And what we're saying is, bear markets usually start when there's recession looming, although the bond market, which today, the 10-year Treasury, hit the lowest in history. In history, we're below 1.4% in the 10-year Treasury. So I heard speculators out there a couple of months ago saying, hey, we'll see 1.25% before we see 2% on a 10-year Treasury. I said, oh, you're crazy. You're not going to see 1.25%. But here we are, a stone's throw from 1.25%. What does that mean to you? Well, mortgage refis are still in vogue. You can still get really low-rate mortgages. So if you haven't refied, you missed that boat, maybe another opportunity to take advantage. But it's also telling you that the economy is on thin ice. It tells you, certainly, we see it around the world, that the world economy is slowing, and negative interest rates over the across the ocean are really adding to bond prices here, which are lowering our yields. Okay, so let me explain that again. The German the German bonds, they're negative interest rates. Okay, Japan, negative interest rates. So if you give the Japanese government some money, they're going to say, great, so you're going to pay us 0.25% and we're going to hold your money for you. So money, smart money, they're not paying for their money to be held, so they are buying our U.S. Treasuries, which when you're buying, okay, there's a lot of buying that lifts your demand, which lifts your pricing and lowers your yield. So as bond prices go up, the bond yields go down. So now we're at historic lows in 10-year Treasury. So the bond market usually gets it right. And the bond market's saying, hey, this economy is not very good, and we could be in for some trouble. So we'll see what happens. We're still growing, albeit first quarter GDP came out at 1.1%. That's a slow growth. However, the estimate was about 0.5%, so a little bit better than expected. So we'll see what happens second quarter. Now we have to look forward to earnings season will start next week. Alcoa will kick things off next week, and then we'll have that flow of earnings. Now, earnings in the S&P 500 stocks supposed to be, again, another negative quarter of earnings, so looked like it would maybe down about 6% in S&P earnings. Again, that's not great for the stock market because you also have, when that occurs, PE ratios or multiples contract, which means you could have a little bit of pressure. Look, we took advantage of some opportunity when the market got hammered last week. We almost picked it off the low. We don't know if that's going to be the all-time low. In fact, probably is not going to be an all-time low. In fact, I would think that at some point we go lower. But you want to try and pick and choose your spots. And again, we're trying to find opportunity that doesn't care what happens to Great Britain. We don't care. We're looking for opportunity that is going to be trade on its own. All right. So we mentioned small caps, like them because they're really least affected by what goes on internationally. Because in general, small cap companies only do about 10% business internationally. So currency fluctuation, strong dollar may not hurt them as much. Weak sales over growth overseas, okay, may not affect them as much either. I like biotechs here. Biotechs had a pretty good run. Now, they're very volatile, but biotechs typically outperform in the fourth quarter because the FDA is really trying to get some things approved and pushed through. So I tend to think that if Britain leaves the European, excuse me, I'm a little bit clogged up today. If Britain leaves the European Union, it's not going to affect these biotech companies from getting drugs approved or getting through their phase 2 and 3 clinical trials. Okay. Now, that being said, we're going to have a series of webinars coming out, and I've had a request for a webinar or a seminar for younger people, all right, for teenagers and young college kids. because apparently they don't teach investing in school, which is kind of ridiculous, but I'm actually volunteering my time to do some things at the local high schools and teach Investing 101. I have a great little course, Investing 101. It's really simple and it's really easy to understand. So check my website, stockdr.com. We're going to put that on the schedule in the next couple of days. It'll be a webinar, so you can sit down from the comforts of your home, and you'll be able to follow along and ask questions. Then we'll be doing our market jitters again. Women in Investing has been requested once again. And so check our website. A lot of good stuff on there, but we will keep you posted. Also, there's a great event for the Pulse victims Sunday, July 10th at the Post Time Lounge. I am heavily involved in that. So we encourage everybody to be out there. It's Sunday at the Post Time Lounge. There's 2 stages, 11 bands playing, a lot going on, a lot of raffles, a lot of silent auction stuff. We're going to raise a ton of money for One Orlando, the One Orlando Fund, which is really the biggest fund and the one that the mayor endorses and Disney endorses. And so that money is going to go to the victims and their families. So we'll be doing that, and I'll be heavily involved there. And certainly, if we have any raffle items that you listeners want to donate to us, we'd really appreciate it. We'll be doing a lot of that. That'll be Sunday. It's going to be from 11 a.m. to about 7 p.m. Sunday at the Post Time in Longwood. Again, 2 stages, inside, outside. It's going to be a great time. We'll be had by all, I promise you. Just private message me if you want to help us out. Anything would help. Thank you very much. In the meantime, markets will be down today. They were down yesterday. I don't know if we're going to give all those gains back from last week, but I certainly believe that we're in a little bit, of course, yesterday. One thing we have to worry about also is this presidential election now is getting a little bit, it already was interesting, got even more interesting yesterday when extreme carelessness is going to be the new buzz phrase going forward. So we'll see what happens there. And I'm not going to get into the political part of it because I know everybody has their feelings on it. And all I know, anytime I get in trouble again, if I get pulled over by a police officer, I say, "Officer, I'm very sorry. I just had extreme carelessness. So I assume that you can give me a pass on this ticket, right?" I don't think so. Hey, everybody, have a great day. And I will try and get you another video later this week. The way that Monday was closed with the market, so we'll do something. But anyway, have a great day. StockDR.com. I'm Lee Seiler. Thanks for joining.